Hello, YouTube. Today we have a bull party. We're putting in a new high of the month. That's right, a new high for the month of October. Our previous monthly high was 379.46, and we pushed higher by about 50 cents, which means we actually penetrated 380. This is so important because, as the thumbnail suggests, we have a very important area to watch here. Red means resistance, and that's where we currently are. We're inside of resistance. So what we can note is that we are currently building up pressure as we go from our low in October to where we are now. And we note that the volume also confirms the move since we put in our capitulation low. We note that we got big volume followed by big volume and what? Continuation higher. We talked about this on Friday because as we closed near the high of the week, we were looking for the pressure to get released, which it did. And now what we want to look at is what actually happened with the gap up. We actually pushed all the way down to 373.11. If you remember, these levels are very important because they are yearly levels. So now that we are going to shift gears here, I just want to remind you of what's actually happening here inside this box because 380.54 is the area that I am really looking for us to kickstart some momentum. 380.54 goes all the way back to our May low, which means that we spent some time above, spent some time below, but now we're trying to revert back to the mean. And as we look here to our absolute downtrend, which means connecting the wick, and where we are now, if we just go sideways for tomorrow, that's like kind of a win. So let's look at this one more way. We're now going to look to a 12-month chart, which is going to be an annual chart. We currently have a bearish engulfing candle, which is bearish. And what's so important is that if we're going to continue to go higher, there's two levels which are really important to me, as I just alluded to. It's 373.88, which is going to be our 2020 close, 373.88. Then we got 378.46, which is our 2020 high. And what did we do? Well, we closed above it, 378.87. So these bulls are flexing. And the question is, will it be enough for us to go further higher? I'm going to come back and look at the charts in a moment. Let's frame the conversation in terms of what happened here. So sentiment boost. U.S. stocks posed best week since June amid earnings. Focus on technicals. There we go. Morgan Stanley's Wilson sticks to bullish call amid client doubt. Still thinks we can go to 41.50. Really interesting. Goldman Sachs also releasing a note today telling us that they see the path to a soft landing for the economy getting clearer. Looks like the market is finally getting some of that sweet, sweet relief. Wilson sticks to bullish call. That is Mike Wilson. While some may argue a recession is inevitable over the next 6 to 12 months, the market will not price it in our view, until it is definitive, until it is actually happening. That is really important for us to keep in mind as we go into an earnings jam-packed week. The earnings report scorecard so far is that 20% of companies are done. Another third are coming due this week, or $15 trillion in market cap. So far, third quarter earnings have a 56% beat. Third quarter sales have a 82% beat. Third quarter EPS versus estimate, 71% beat. And third quarter sales versus estimate, 51% beat. So we don't have earnings capitulation yet, which means that people are starting to actually get a little bit less fearful. We got our first daily close inside of neutral on Friday. And now we only have to tick higher a little bit more for us to get into greed, where it gets easier for us to go higher than lower. Another way to try to look at this is the heat map, where today, as we know, there ain't no party like a bull party. Not everything is rallying together. However, from low to high, we now note that the NASDAQ is roughly tracking SPY, but it did not make a new high of the month. If we look at QQQ, if we look at XLK, which does not really include Tesla, that one's doing better. And Tesla, I have to give a shout out to KRAV, who thinks that Elon was selling stock today. And that would largely explain the move that we saw. Tesla dipped like 5+% today. Has to sell more stock for going into his Twitter deal. And now we're right here near the high. So that looks like really interesting. Elon probably unloaded a couple billion in stock today. We'll see. We'll be looking for that report shortly here. When we look to the 1 day, this is nice. There's mostly green. What I want to do instead is actually zoom up to higher time frames, like a 1 week where a lot more things are green. We like green if we are bulls. We look to our 1 month. Here's where there's still some challenges. When we look to tech, we note that Apple is actually red. Microsoft and Google are green. Meta is red. But also here we got utilities, consumer durables, consumer non-durables, and financials kind of mixed. This is the leadership I want to see. I want to see a tech-led rally. So I want to see this theme continue. I really, really, really want to see that for the bulls. Finally, as we talked about on the weekend, we also have a lot of earnings coming up today. Tomorrow is where the focus is going to start really coming to big tech. We've got UPS, GM, and Coca-Cola tomorrow. After the bell, we got Microsoft and Alphabet, and those are both expecting beats. So let's look and see whether we can get even more pressure released. What's really interesting about today's move, let me actually just refresh this to make sure we got the right data, because I'm noticing the put call ratio is getting like really skewed here. So when we look to, it's actually here to 50-50. So what's really interesting about this 50-50 is that we are seeing some mega big elite orders. Look at this. We got a $100 million SPX put order for a block. Then we got 50 million SPX, 40, 30, 10. There's just like so many puts being bought. So keep that in mind as we're now going to look at a couple of charts and try to wrap the story up. We're going to look back here to SPY on the one-day chart. And I'm going to go through a few more things after. But what's so important here is just that we talked about this downtrend, which we're currently battling for, but we also have this area here where it says patience, and we have this green circle, and we also have this line over here. The corresponding one for us is right here. All that means is that the S&P is trying, keyword trying, to break this pattern. And if we now delete everything to try to tell the story in a different way, we're now attempting our first, second, and third time to try to reclaim this area. We're trying to put in a dub or a W. And generally speaking, when we put in a W, it usually breaks on the third chance because we have to give people a chance to sell, have to give them a chance to exit, and they have to choose not to. So what's really interesting about this is what we pointed out on the weekend where, if we give people a chance to short, well, they did. They added back 60,000 contracts just into Friday and closing right near the high of the week over our 2020 high. That could be the fuel which drives us higher, in addition to all of that put flow. So now as we are here to our third test, it is so important that we just push up a little bit higher. I'm looking for 380.54 specifically. Otherwise, as I look here to the period we were in before, I'm noticing that maybe we're going to get an exhaustion gap tomorrow, which means we're going to get an exhaustion gap like over 380, and that could cause the start of the drop where we actually come back down and form that higher low before climbing our wall of worry. That's really what I still think we're going to do. And I've been trading this. I've been trying to lay out more swing trades as well. And if you want to follow us, there's a link in the description if you want to trade with me. Otherwise, what I really want to see for us to continue higher is where we actually form that weekly higher low. We're now hitting my red line, which means resistance on the daily. And we're pretty close to the red line here for my weekly as well, which means resistance or our bear market territory. So we're definitely closer to resistance than support, but by closing at the high of the week, at the high of the day, the pressure's still on. And as I look here, our 61% retracement is at 380. We just poked over that. That's correct. So we went from roughly our 50% up to our 61. It's almost like the robots are doing the trading for us. That's right. Robots do most of the trading, or algorithms. So our job is to try to decipher what they're doing and try to make some money. All right, a few more quick charts here to look at. We got QQQ, or the Qs, and we note that we don't quite have a new high of the month because back in the beginning of October, we were actually as high as about 284. However, I'm going to jump here to XLK because XLK actually does not include as much Tesla and Amazon, and it's actually a lot closer to its October high here by only about 1.5%. This one is not going to include Tesla, so it just gives us a different perspective. We now look to QQQ on the daily. We have to remind ourselves that what did we push off of today? Our low is 272 basically, and that's exactly $1 off our 200 weekly moving average from last week, which means it's trying to bounce off the 200 weekly. It has actually broken its long-term downtrend here on the daily, and that's the breakout. The question is, will it hold? Is it going to be a trap? Honestly, I don't know. Last things for us to look at here are just going to be everything we don't want to see up. So we got the dollar up. We got VIX up, even though it's at the low of the day. 2-year up, 10-year up, inversion up. These are not things we want to see if we are bullish because they give us a contradicting view to where we should be going. And the last thing I just want to leave you with is that, again, the UK does have a new prime minister coming in tomorrow. They're going to be climbing a wall of worry. We're going to talk about that more tomorrow. But really keep in mind those 2020 levels, the 373.88 and then 378.5. Otherwise, if you want to trade with me, Justin, click on the link in the description. If not, the video that's queued up right now will give you my deeper thoughts on the weekend. Thank you so much for watching. Look forward to seeing you tomorrow. Thank you.